Hi guys, I welcome you in this wonderful video. So there is something I want to share with you as far as price action is concerned. So here we are, you can see my beautiful chart. The market is moving in a downtrend and I'm in a daily time frame here. In my case, it is the highest time frame, or in this example it will act as the highest time frame, but it doesn't matter what time frame you use. This is gonna help you because I'm doing this for educational purposes. So as you can see here, the market is moving down, and it is clearly showing us that the sellers are dominating. As you can see, the lows and the highs, they become lower and lower. But then there is something interesting here. We know that when the market is moving in a trend, for this case, it is moving in a downtrend, and we know that when it is moving in a downtrend, the only waves that we are interested into, it is these waves, the corrective waves. These are the waves that we want to pay attention into, because these are the waves that are gonna give us an entry. We don't enter in the impulsive wave, but we want to make sure that when the impulsive wave is rolling, we are in the trade. Where we enter from these corrective waves so that we can benefit from the impulsive. So that's why we need to pay much attention into the corrective waves compared to the impulsive. So here we can see that a corrective wave is information. If I can clear my screen, you can see that the corrective wave is information. And if you can use a different method, you can see even the trend, it was kind of respecting some Fibonacci levels. I can just put it there. You can see our retracement that it bounced here on the 0.5 ratio level. And even in this part, you can implement that tool, the Fibonacci, and you can put it all the way there and drag it all the way down. Let me just fix it. And as you can see, that currently price is in the 0.5 level, but it will be hard for you to just make a decision from there without seeing signs that indeed now the market is going down, because you can press maybe the sell button around this area, or around that area, or around that area, but the market can still go up. So you need some kind of assurance to see that, okay, indeed the market is likely to go down. But unfortunately, as you can see in this time frame, there isn't much that you can see in terms of buyer strength and seller strength inside this wave, because the price is very summarized. So that's where you have to go to a lower time frame, and the only thing that you have to do in a lower time frame, let me just go to the 1 hour. As you can notice, I've skipped one time frame, which is the 4 hour. It is because I wanted more information, or I want more data. So as you can see here is our corrective wave. Now what you have to do as a trader is that, okay, now you have to begin to treat this corrective wave as a trend on its own, because if you are a lower time frame trader, you're gonna be seeing this as a trend. You as well as a trader who is not a short-term time frame trader, but you are just here for confirmation, it is very important to look at this market as you would if you were a short time frame trader. So what do I mean about that? I mean that now you should focus only on the strength of this wave, but in this case it is a trend. You have to focus on the strength of this trend, and the strength of this trend, or the behavior of this trend, is gonna tell you if you should enter or not. So what am I talking about? If you can see here, we can see that, okay, this trend have been shifting in terms of its market flow. We can see its initial flow here. It was bouncing or respecting this trend line as I've drawn here. However, in this case, or in this price here, it started to shift. Now the trend is a little bit more aggressive. What does it mean for our trend line here? It means that now we have to change and look at the market in a different flow, meaning we are not going to make decision only based on this trend line in this case. Why? Because the market have shifted. It is now flowing in a different momentum. So what we're gonna base our analysis in this kind of a flow, which is a little bit strong. However, we cannot draw a trend line for now, because there are any visible waves or visible lows that we can connect. But what you can do is that you can even break down the strength without the trend lines. Let me just erase. As you can see here, that okay, here we have this huge impulsive move, and then we have these smaller correctives. And as you can see here, that we had these correctives which are smaller, and then we have this one which is getting bigger. So now our purpose it is to wait for our next high to see if okay this acts as a high. Maybe let's say the market starts to go down. We know that okay now the market is shifting again from this kind of momentum or from this kind of strength into a more weaker flow, and then that might indicate that okay it is likely that the price is reacting from maybe that Fibonacci level, or it is likely that these can mark the beginning of an impulsive. But what you have to do as a trader is that you have to make sure that you see the lower lows and the lower highs being formed in this time frame, and then once you see the lower highs and the lower lows being formed in this time frame, then it will be a good time for you to make a decision or an entry decision, because it will be confirmed that okay now the market is likely to reverse. However, it doesn't mean that you should ignore some other levels. Now for an example, in this case, if I may just drop a horizontal line, we can see that we have this level here. It doesn't mean that you should ignore it. You should pay attention into this level as well. When price approaches it, it might act as some kind of pause, or it might give the price some kind of a little bit of a break, just as it did here. I don't say that it is this level that caused the price to slow down here, but I'm just making an illustration. You can see that it was starting aggressively, and then it started to just be slow, and then it broke all the way up. So that might be caused by this area here. So we can't ignore this level. We can't ignore this resistance in this side, or even this one, depending on where you want to put it. But I can treat these two areas as almost the same, because they are the price difference is very small. So you shouldn't ignore when price begins to show you signs of slow down when it approaches this level. However, it doesn't mean that you have to panic and start buying. It is not a good idea to begin to look at this market as a buyer, just as we've seen here on the high time frame, that it will take a lot for us to change our perspective to see this market as a buy. It will take a lot. We really have to see this flow. Let me put back my initial trend line. We have to see this flow being broken for us to say okay now we are no longer looking at this as sellers. So as long as the market is still giving us a high that is below that one, and it is still giving us lows which are getting lower and lower, then we are still sellers until we see maybe something like this. That's when we're gonna say okay now we have to change our perspective. Why? Because now we'll be having a high that is higher and a low that is higher as well. So I hope this is gonna be helpful. Actually, it was some kind of educational material, not some form of a signal. So I believe that this is gonna help you improve your analysis. So thank you for watching.